All right, all right. Welcome to Chapter 4, Study Guide for Trading in the Zone by Mark Douglas. Let's get it started. So here we go. So in Chapter 4, Mark Douglas explains that trading consistency is not about finding a perfect strategy. I don't know how many times I've said this on this channel, right? And I know I'm just some scrubby YouTuber, all right? But it's not about the golden strategy. It's seriously not. It's about your mindset, and it's about how you used it. I have seen terrible strategies work for people because they have the right mindset. All right. And one of my famous ones is a guy that mentored me who was legit, and he was like 40, 50 years deep into this, and he traded standard market patterns. Okay. So seriously, when Mark Douglas says something like this, take it to heart. It's not about the golden strategy. Stop strategy hopping. If you need one, you can DM me, hit me up in Discord, whatever. I'll give you one, and then you can work with it, and it should make you money. Okay. And I mean, it may not be like the golden strategy that you're just like printing money off of, but you should be profitable. All right. It's about cultivating the proper mindset. A consistent trader thinks in probabilities, which means a consistent trader is okay with losing. All right. I wish I had a mirror right now. I would hold that mirror up and say it's okay to lose. I have a problem with that. So I just took that moment to pour into myself. So sorry, I stole the show. All right. It's okay to lose. It's okay to lose. Actually, if you think in terms of probability, you're supposed to lose. All right. Remains emotionally neutral and executes their plan without hesitation or fear. Okay, Douglas emphasizes that consistency starts with adopting beliefs, okay, that align with the reality of trading. Anything can happen. Every trade is unique, and the market is always offering endless opportunities. All right. So I've said this many times. I feel bad because I repeat myself, but um, not everybody watches all my videos. But I visualize the win and I visualize the loss when I'm entering a trade. Okay, before I enter, I already know risk to reward. I know my take profit, stop loss, all that's all done ahead of time, and then I click go. All right, I click buy, I click short, long, whatever, green button, red button. All right, I click those buttons. I'm in the trade. I visualize the stop loss getting hit, and I say that's okay. And then I visualize the win, and I say that's okay. Don't get too excited. You hit a W, right? All right. So execute. You can remain emotionally neutral and execute their trades without hesitation or fear. So that's another thing. All right. I kind of have like I don't have fear of entering trades. Okay. Unless somebody's watching me, I do have performance anxiety. Sorry, that's why I don't like really live trade. I just don't because I think I would completely annihilate my psychology. And I'm profitable, and I want to stay that way. So that's why I don't do it. I know people who live trade, and man, more power to them that they can remain profitable while under that pressure. Okay, stress makes you stupid. All right. So hesitation is not a problem for me personally because I'm a little bit of like a revenge trader, a YOLOer. Like I like risk. I get a thrill out of it, so I have to be careful about the opposite, right? About being trigger happy, being like, oh, we hit a level, go. There's no confirmations, right? There's no inverted fair value gap. There's no fair value gaps. I'm just like, we're at the level, let's go. Anyway, that's my problem. All right. So anyway, so Douglas emphasizes that consistency starts with adopting beliefs that align with the reality of the trader. Anything can happen. Every trader is unique. The market is always offering endless opportunities. Success comes when traders stop focusing on being right, this guy, and instead focusing on their edge over a series of trades. I have an edge. I'll share my edge openly. I don't care. Um, I shared it the other day, and a guy was like, "This is amazing." I'm like, "Yeah, I know," and it's like very easy. So I do have a video on that. I'm gonna make a new one because I've kind of simplified it even more. But I need to practice even me, right? Who's profitable. Sometimes I get too excited. I'm taking trades I shouldn't, right? And then after when I journal, I'm looking at it going, well, if I didn't take that trade, I wouldn't have taken that loss. Anyway, you guys understand the game. All right. So key things and concepts. Consistency is mental, not technical. That's huge, right? Many traders obsess over technical analysis, indicators, strategies. These alone do not create consistency. All right. I'm going to pick on you guys who have data spreadsheets and all that stuff. It is a necessity. Okay. But that's only a small percentage of the actual trade plan that needs to be put forward. All right. I met with a guy. I was so impressed with his spreadsheet. I was like, this is amazing. And what I like is he's actually doing the work in the other areas of day trading that you need. So he's not hyper focused on just that piece, which I think is amazing. I'm looking forward to, watching that success bloom and go crazy. But you have to be willing to not hyper focus on technical analysis. Some people, that's all they do. That's why some people are the best technical analysis people you've ever seen, and they can't be profitable because it's like their mind just breaks as soon as they hit the go button, right? The buy button, the short button, whatever. Okay. So you need all of that, all right? But just technical analysis, indicators, and strategies does not create consistency. All right. Your mental framework, how you perceive risk, losses, and opportunity determines consistency. All right. A lot of people are like, if I find the golden strategy, I will become consistent. I've never seen that happen. All right. The only thing I've seen happen is someone who has a strategy, they've back tested it to death, and they know it works and they can't forward test it, and they end up coming to the end of themselves and they're broken and they're like, I know this strategy works, but I just can't implement it, right? And then they reach out to somebody, I want to say like me, but okay, it could not like me, but like somebody who understands the psychology of trading, and then they get mentored in that area, and then all of a sudden they're starting to make profits, right? And of course, you're going to still go through ups and downs. You're still going to struggle here and there. We are tapping into our nature as humans, and it's getting challenged a lot when there's money and emotions and things like that involved. So yeah, your mental framework, how you perceive risk, losses, and opportunity determines consistency. I am a very optimistic person. I have a very high work ethic and drive, ambition. So, how I perceive things when I'm in the market is affected by that framework. And I have to be careful. I have to keep that framework within the bounds of what I know allows me to be profitable. Because if I get over ambitious, I want to over leverage, I want to over trade. I want to, in my mind, I want to compound, 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 relax, man. Just take the strategy as it is. Either you win, you lose, whatever, right? Okay. A great strategy means nothing if you can't execute it without fear or hesitation. All right. You can't train yourself to be a robot. I've heard that before. You got to be emotionless. So, like there may be a handful of people who can do that, but it ain't me. If anything, the more I day trade, the more I realize how much of an emotional being I truly am. Like legit, one of my signals is if my hands sweat, I'm done. I'll walk away because I'm like, dude, like I know if I'm getting to that point, I'm about to go haywire. I'm about to, like seriously pull a Michael Jordan from the 3 point line trying to dunk, full windmill 360 with a flip, which is not really possible. So that's what I'm trying to say is I will try and do things that will blow up an account, right? Because of the ambition and that like drive. And anyway, so you need to think in terms of probabilities. All right. So I'm going to try and say this word again. Probabilistically thinking is the core of consistency. I don't know. Drop in the comments if I said that correctly. I think it was the last video. I was stumbling all over this probabilistically word. It's insane. But you guys get what I'm saying. It's super important to understand when you put on a trade, you just wait to see how it plays out and be okay if it's an L or a W. Like, be okay with it for real. Because if you hit your level, you followed your strategy, you saw your confirmations, you managed the trade correctly, and you lost, that's a W because you did what you were supposed to, right? Excuse me. But most of us are like, I took a W. Why did I take a W? Let me go back and now let me do my technical analysis. How could I have avoided this loss? How could I have turned this loss into a win? Why didn't I see that I should have done the opposite of what I did? If I had just done the opposite, I would have won. You gotta stop thinking like that. And the only reason I know this, you know why I know this, because I've said it in videos. Because of this guy right here. I still feel these things sometimes, right? I'm still like, a lot of times I go back and I go, okay, let me double check. Did I do something wrong? I didn't. Okay, W for me. I'll take that L as a W. All right. Professional traders understand that each trade is just one of many possible outcomes. I try and challenge people to do 50 to 100 forward testing journal trades and journal the ones that are your actual strategy, and then you calculate that P&L separately, and then you do one that has your actual strategy mixed with your FOMO, your fear, your what revenge trade, right? And then you do that data as well, so you can see the difference, right? Is my strategy actually profitable? Well, let me remove me and my mistakes and see if my strategy is profitable, but in a forward testing environment. Back testing is great, guys. We got to do it. But I haven't back tested in a very, very, very long time because I know my strategy works forward testing as long as I keep myself under control. Okay. All right. They don't need to know which trade will be a winner to make money over time. All right. So if you know your strategy works, you you just don't need to focus on the winners and which trades will be winners. You just let the losers play out, you let the winners play out, you let the numbers play out. You're thinking in terms of probability. Okay. This is a very hard thing for humans to do. Okay. Because we want to avoid pain. We want to avoid being wrong. We want our ego stroked. You know, I stopped doing it, but I used to love being like, yeah, did you see that trade I posted? Yeah, that was good. Look how smart I am, right? Like, you got to really be careful with that. And that's actually like early on when I was in some discords and like people would post the P&L shots and stuff. I noticed that when I would hit a banger and I would post it, it was like I go on a losing streak. And I noticed that that losing streak was specifically over trading. It was because of the dopamine that was released and me going, look at my W, and everybody going, fire, thumbs up, what's your strategy? You're so good. And it would stroke my ego and it would mess with me. That's why I don't do it anymore. Usually if I'm sharing a trade that I win, or that I've won, if you notice, it's like a week later because I want that trade to become old news to me. So that way I don't get that kind of like ego boost and I don't get that dopamine hit from it. And that's honestly why I do it, guys. Like, seriously. I noticed I would go on a over trading spree because I was excited and I felt, good and I felt like I couldn't lose and whatever, right? And then I just realized that certain behaviors was costing me money, so I stopped doing them. All right. All right. So let's move on. All right. Trading is about the law of large numbers. Results are measured over many trades, not one. Okay. If you lose a trade, sure, go back, double check, make sure you actually did your strategy correctly. I mean, I've done it. I've missed I've put my lines at the wrong spot and be like, oh, I thought that was Asia low and it wasn't. Right? I've done that before. I've made those mistakes. And then I go back and I'm like, like Asia low was a little lower than I thought it was. So I took the trade early and then I got swept out. That was my fault. That was a technical analysis fault. No biggie. But that's one trade, right? If I'm actually following my strategy, I need to look at the results over time, not one trade at a time. How can I fix every single bad trade? These are things that people hit me up with all the time in DM. Like, why did this trade not work out? Like, I don't know. Because buyers flooded into the market and we were trying to short. Like, I don't know. It's like it's supposed to lose a certain amount. So I think it was just one of the losses, I mean, that's really where I try to get the logic to go. So the dangers of the need to be right, okay? This is where I have that mirror up very much. The desire to always be right leads to emotional attachment self-guessing and over trading. Now I'm gonna talk about something that's kind of funny. Okay. All right. I do play Minecraft. Don't laugh at me, but I do. All right. And a lot of times, if I was a streamer for Minecraft, I would get a ton of chat hate because I keep inventory on when I die. And people would freak out, be like, dude, if you can't cave and bring back what you know, if you die when you're down there, you're supposed to lose what you had. And I'm like, I get so attached to what I've worked for. Okay. I have to make sure that doesn't bleed over into my trading, and I'm telling you it does. Okay. I try not to look at P&L because I get attached to money that's not technically mine, and I know this about myself. Okay, when I look up when I'm in a funded account, and I look up and I'm like, I've got 8 grand in the funded account, right? And I know I'm about to get a payout. So in my mind, I'm calculating 4,000 of that is mine. Let's go. I need 2 more winning days. I'm attached to money that's not mine. Okay. And I have an emotional attachment to money that is not mine. And that emotional attachment carries over into my decision making when I trade. So I really focus on not allowing myself to do that. And the only time I say that money's mine is when the payout email comes through and it says, congratulations, you've requested, we're sending it over. And then I go and look at my bank and I'm like, there it is. That's when I will allow myself to be emotionally attached to my payouts. Okay. Because seriously, I get so attached to money that I don't have. And so when I lose a day, let's say I lose 2 grand because I kind of overtraded, and I'm like, oh, now I only have 6. Now I only have 3, because I can only take 50% until it's a fully live funded account. Okay. So I'm attached to money that's not mine. All right. I hope that makes sense because that's a huge one for me. I don't allow myself to say that's my money until it's hit my bank account. All right. So tangent. Let's move on. All right. Losing traders see losses as personal failures instead of natural cost of doing business. Okay. I have about it's usually like almost at a 60% win rate. But I call it a 50-50 strategy. All right. I'm like flipping coin strategy. Not really. I have a strategy. It's mechanical ish. I can follow it. I do allow some intuition into it. Um, but it's about a 50-50 strategy. So until I'm losing 40, 35% of, I'm only winning 40 to 35%. I don't even like adjust my strategy. I just like let it go. I don't look to see what's going on. Um, so I know I'm supposed to win, lose, win, lose, win, lose. Now sometimes it's like lose, 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 win, 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 lose, win, win, win. You guys get it. I like winrate.com or winwait.io, I think it is, or .com or whatever. You can go there, put your strategy in, and it can show you, potential loss streaks and win streaks. I've gone in there and I've done the math. Like if I had a combine, I was risking this much and blah, blah, blah. I would have made this, to prove it to myself, right? That a 50-50 strategy can be profitable. And mine is. So, but I have to be willing to take those losses as just natural cost of doing business. All right. So consistent traders see themselves as risk managers, not fortune tellers. Okay. One of my favorite things is managing a trade. And I do have to be careful I don't over manage because I get excited. I like it. It's fun to me. Um, but, I think that that's the most important thing is learning to be a risk manager and not a fortune teller. A lot of people, especially one community I was in, they would always like hit me up, be like, "Where's the market going today?" And I'm like, "I don't know." Well, what are you looking for? I'm like, "Well, if we hit this level, I'm going to look at the reaction and see what happens. From there, we'll see." And that's how I try and look at it. But like when you feel like you can like predict the market and call the market, that can really get into your ego, right? And so that's something I definitely try and fight off. So you're not a fortune teller, you're a risk manager. We got somewhere in the market. I've been waiting for us to get here. I'm looking at a reaction live and I'm like, okay, cool. We're starting to print candles in this direction, fair value gaps in this direction. Looks like we're inverting bearish, price action that was previously printed and now we're looking bullish, change of structure, right? All this stuff. Okay, cool. let me look at my risk management. All right, my stop's going to go here below the low, and we're going to go towards, okay, the closest liquidity target, which is here. That gives me a 1 to 2.65% RR. That great, I'll take it. Or I'm going to have a, 1 to 0.37. Ain't no way, right? Because we could hit that level, reject, and I risked $100 to make $37. Not going to happen, right? I'm gonna let that go. That's a risk manager. All right. Okay. So the edge mentally. An edge is simply a high probability setup that works over time and not guaranteed success on each trade. All right. That's very it just keeps getting repeated here, but this is just so important to understand. Your job is to take every valid setup your plan provides and let probability plays out. If you miss a trade, so what? Let it go. Okay. Um, that fear of missing out a lot of times where people are like, dude, if I just would have had that win. It's like, no, 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 no. Pull yourself out of that. Okay. If out of 100 trades you miss 10 or even 20, you roughly should have the same results, right? 80 versus 100 trades, they should roughly play out about the same. One's just a little bit further down the road with a few extra trades, but probability, speaking in terms of probabilities, they should have about the same results, at least close. Okay. Avoid skipping trades because of your fear or chasing trades because of greed. All right. That last one is definitely like hits me in the face. Okay. I'm not a very greedy person. When it comes to day trading, I definitely have a high greed, and I have to pay attention to it. Okay, emotional neutrality. All right, this is very hard, but man, if you guys could just comment down below with some magic, actually, I don't really believe in pills and things like that, but if there was something that I could eat, like if a banana allowed me to be emotionally neutral, let me know. I'll be eating ginger root on, in the Discord. Everybody, I'm gonna be emotionally neutral. All right, but just recognizing that you need to do these things. All right, journaling what triggers you, and then knowing what triggers you, can help lower your trigger response by like tremendous amounts. I didn't know I was full of greed until I read Jared Tendler's book. I worked with Jared Tendler personally and had some conversations. And I mean, like, the greed index for me, if he had a higher scale, I would have been on it. Like, I was at the highest. And I'm like, but I'm not greedy. But it was my ambition. Okay. It was fueling the greed. And so greed played out in my trading behavior like crazy. Okay. So if you're looking for an emotional neutrality, you need to identify your triggers first, and then you can start to feel them coming. And like if you're about to get stopped out, you're like, dude, I'm about to get stopped out. It's going to make me go crazy, and I'm going to start revenge trading. If you can have that conversation ahead of time, it gives you an opportunity to inject logic into your brain and go, revenge trading in the past has cost me money. I need to practice not revenge trading. So when this trade gets stopped out, which it still may not, but let's say that I'm going to let myself know when it does, I'm going to take this opportunity to practice not revenge trading. Game changer. All right. You can't control the market, but you can control your reactions and risk. Okay. So crazy. If you guys do, man, some of the stuff I've done when it comes to actions and risk and stuff. You guys you guys understand why I make these videos. I'm not joking. I'm not even trying to be funny. Okay? The market is neither your friend nor your enemy. It is just neutral data. The market does not hunt you. Okay, especially if you're trading prop firms. It's fake. It's virtual. You're playing a video game on an online casino. Okay? It's neutral data. It's not hunting you. It is hunting real big players, but it's not hunting you. Unless you're some multi-million-dollar trader, you're not being hunted, in my opinion. Unless you're trading some psycho low cap stock or crypto or something that, like you put in $1,000 at 50x and it goes, whoa, that's the biggest player we've got because no one else trades this. Yeah, okay, maybe you get hunted. But when you're trading like NQ or ES, nah, man, it ain't hunting you. Don't take it personal. Neutral data. You let the whales feel that. We don't feel that. Okay. I'm no whale. I'm like a minnow. Not even a minnow. I'm like krill. Like krill. Anyway, all right. I think that's funny. I just had so many ideas run through my head about what I could do with like krill traders. Anyway, whatever. All right. Practical lessons for chapter 4. Okay. Focus on execution, not outcome. All right. Judge success on how well you followed your plan. And this is so repetitive, but I'm telling you, let this stuff drill into you. Not by profit and loss on a single trade. All right. I've given people my strategy. They came back to me and was like, this thing's terrible. I'm like, well, when did you trade it? Well, I traded it on Tuesday and Thursday last week. Okay, well, those days were losers. But Thursday, Friday was a winner. Monday was a winner, right? And then they like continue to play it out and they're like, okay, I see how this can work. I'm like, it's a 50-50, right? It's not some 80% win rate, golden leg, egg laying, crazy strategy. It's just a solid one that works, right? All right. Stop predicting, start managing risk. Okay. Accept that you cannot know which trades will work. Your job is to limit loss and maximize winners. Okay. Reframe losses. A loss is not wrong. It is a part of statistical distribution of your edge. Let that sink in. Okay. Probabilistically think. Probabilistically. All right. Think in terms of probabilities. All right. Think in series, not singles. This is huge. All right. Look at your last performance of the last 20 trades, 30 trades, 40 trades, 50 trades, not just one. All right. A lot of people do it by a week. I'm like, man, I can't tell you how many weeks I've had that weren't all that great. That, losing weeks. And then the next couple of weeks, it was like, dude, those were banger weeks. And when I hold my loser week up to my winning week, I'm like, I'll take that. But that's easy to do after the fact. It's not easy to do during that losing week. And the problem is, a lot of times, and I'm telling you a story that I've done, during that losing week, you double or triple the loss because you emotionally react to that losing week. Then if you would just let the losses happen that you're supposed to get, the next few weeks would have just like smashed that loss into the ground, and it wouldn't even have any sting. You wouldn't feel it anymore. Like, man, I lost $2,500 that week. Oh, but I made 8 this week, or 8 over the next 2 weeks, right? Like, it's easy to say after the fact, but if you never make it to the after the fact because you don't allow yourself that kind of long-term thinking, then you're never going to feel that. And I want everybody to feel that. I want everybody to look back and go, that week was a terrible loss, but that was okay. Because look at this W week, all right? Just don't do it so publicly that you blow up your ego and then you start smoking accounts because you think you're, amazing. Not that I've never done that too much. All right, I've done that. Okay, so reflection questions. Am I trying to be right on every trade, or am I focusing on executing my edge? Okay. Do I view each trade as a part of a probability set, or do I judge myself on single outcomes? A lot of people are like, this day was good, this day was bad. Don't do that. Okay. Just think about your whole strategy as a whole. Is this strategy good or is this strategy bad? There are bad strategies out there. Okay. And figure out what yours is. If it's a bad strategy, go find another one. There are a handful of strategies out there that are super easy, like the orb or something. Like, opening range breakout is a pretty simple strategy. And, most people can follow it. And if done properly, especially with a few tweaks, it's a solid strategy. And it can work really great. Mine is like time-based liquidity. Asia high, London high, Asia low, London low. Those kinds of things. Previous day high and low. That's pretty much it. There you go. There's my strategy. And then I trade, and I when we get to that level, I look at price action. I say, we print bullish or bearish. That's pretty much it. like, All right, I just gave away my strategy. There you go. It is that easy. But okay, so the implementation, the idea of it's easy, but I understand the implementation can be very hard, right? I struggled for many years. I still do. I've just gonna keep working at it. All right. So view them. Don't judge yourself on a single outcome. All right. How do I feel after losing a trade? Do I accept it or do I take it personally? I sometimes still take it so personal. And I've been trading the strategy for like way over a year. I would say even almost 2 years. And I believe in it. And sometimes I still feel like it hits me personally in the ego, and it shouldn't. All right. Am I defining consistency correctly as disciplined execution, or am I equating it with never losing? So that's kind of a mouthful. Um, you really just need to consistently execute your edge and understand that there's going to be a certain amount of losses, and that's it, right? Don't overcomplicate it. Okay, so action steps and exercises. So edge definition exercise. Write out your trading edge in simple terms. Okay, I trade Asia high and low, London high and low, previous day high and low. When we get to one of those levels, I look for fair value gaps, inverted fair value gaps, displacement candles, and then I will look at which way it's going, right? The market momentum, right? Bullish or bearish, and I will take a trade if my risk to reward from the last swing high or low to the next liquidity level is acceptable. That's my entire strategy. That's it. That's all I do. Okay. Um, I encourage you, if you can't regurgitate your strategy that easily, find a way to narrow your strategy down to where you can. It's very important. And I just looked at how long this video is going. I'm sorry it's a little longer of a video, but I really feel like this stuff is like game changing for people. So I really, really, really pray and hope that this changes people's trading for the better. Okay. So, answer: what makes my setup profitable over time? If I can keep myself out of the way, if I can keep my mental game the way it's supposed to be, when I wake up tired, groggy, and emotional, and I don't trade. I just say this ain't gonna be a good day because I'm gonna be like looking to windmill dunk on somebody so I can put someone on a poster so I feel good and have my ego petted. I don't trade those days. Okay, I do pay attention to my mental state. If I am crazy stressed out, I don't trade. All right. I just know behaviorally that that's going to affect me negatively. All right. I will not get my close rate I'm supposed to. I will not revenge trade and those kinds of things. Okay. 20 trade challenge. Here it is, at least. Man, for you overachievers, go 30 or 40. All right. 20 trade challenge. Commit to taking the next 20 trades based solely on your plan and nothing else. Track how well you follow the rules, not how many trades you win. I don't even care about your P&L. On P&L, we don't care. I want to see a 20 trade challenge. Take it. Take your strategy. 20 trades. All right. One ticker. All right. If you're able to do that. I only trade one ticker. I trade NQ. That's it. One. One ticker, 20 trades. See how it goes. Actually following your plan. And if you can't regurgitate your plan like I just did, then you're in need of refinement. Okay. If it's so complicated and so convoluted that you can't like just simply say it, I would look into simplifying your plan and being, because all right, what I see is people get a plan, it works, but they want to take their win rate from like 55% to like 80, and so they start trying to filter all these losers, and that just doesn't work over time. Now there is a time for that, right? But when you have to add like all of these lists of confirmation, so that way you ensure a win, I'm I'm out. I've never seen it work. Okay, just repeat easy, simple, repeatable strategies. All right. Emotional audit. After each trade, rate your emotional response. 0, neutral. 10, high frustration or excitement. Okay. But if you take a trade that is your plan and you rate that sucker a 10 and you don't continue to revenge trade or FOMO or anything like that, and you wait patiently for your next actual trade strategy, you need to reward yourself, even if it's just a simple pat on the back. Okay. Because eventually that'll play in and your responses will be a 7, a 5, a 3, until you're just like, let's see if it works. Okay. All right. Aim to reduce emotional spikes over time. All right. And then also pay attention to your triggers. Like I just said, a bad day at work, a fight with a significant other, whatever, right? Those kinds of things. If you know you're emotionally triggered already, the charts are not the best place for you. Okay. All right. Probability reminder. Before trading, read this affirmation. I don't need to know which trade will work. My edge will play out over time. So you're not trying to pick your good trades. You're simply trading your strategy. I'm going to say that again because I get this a lot from people. You're not trying to pick the best trades. You're just simply allowing your edge to play out. You simply follow your strategy. Okay. Chapter 4, takeaway quote. Consistency is a state of mind that comes from eliminating the need to be right and embracing the true nature of probabilities. So there you go. Find your strategy, go roll your dice, and who cares? Okay? Try your best to take that attitude, take these challenges and these things seriously. And I really feel that this will make a huge difference in your trading. I really hope this video is helpful for you. You guys go ahead and do all that commenting and liking and sharing and blah, 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 so I can blow up this channel, so I can have, 400 subscribers and, become a viral YouTuber. I really don't care. All right. But anyways, if you think this would help somebody, I would appreciate you sharing it out to them. I'm in the business of trying to absolutely remain as transparent as possible and as authentic as possible. And I really want to speak actual truth into people's lives that changed my day trading for the better. I'll see you guys in the next video.